The geopolitical tensions and the impact on asset classes by and large. Tensions have risen in the Middle East. Let's get in Arvind Sanger, who joins in to speak about the impact, the potential impact of this and more. Arvind, good morning, or rather good evening to you. Thanks so much for taking time out and joining us this late. It doesn't seem like asset classes, or at least the equity markets, let me qualify my statement, equity markets have reacted too negatively to this. Is it because the developments over 48 hours seem to suggest that a risk of a large standoff between US and Russia seems to have dissipated?
Yeah, exactly. I think that at the end of the day, the US and its allies, the UK and France, did what I guess was can be best be described as a limited strike. They were very careful not to hit any places where Russian assets or Russian troops could be hit. Therefore, while there's been a lot of noise from Russia and from Iran, in addition to Syria, it doesn't seem to be leading to any lasting ratcheting up of tensions. So, the tensions between US and Russia have ratcheted up in the recent tit-for-tat expulsions of diplomats, as well as some additional sanctions from the US. I don't think anything that happened over the weekend is going to improve that situation, but it's not going to make it dramatically worse.
Arvind, what about commodities at large? Typically, when we've seen stuff like this happen, we tend to see spikes in gold, oil, etc. And while we did see small spikes coming out there, do you believe there could be a lasting and a telling impact on any of these?
No, because the markets were anticipating this happening. I mean, the markets have already been moving up on this. So in a sense, anything that happened was not worse than what the market had expected or feared, because this was widely telegraphed that something was coming. So I don't see any meaningful impact. As far as oil is concerned, Syria is a minuscule at best exporter of oil. So any impact on Syria, if there is any on oil exports, will have absolutely no effect on global oil markets. So I don't think that's anything to write home about. And I think gold which is really a factor of risk off or concerns about global dislocation. As we said earlier, it doesn't seem like, at least as of now, there's any global follow through. So I think that news shall pass, and I think all eyes will be back on, both on the trade front and on whatever is going on with, Donald Trump and the special prosecutor and, his attorney in New York, the raid on that probably, those issues come back to the fore. And I think the Syria issue is quite likely to not cause any further meaningful impact on the market.
So final question, Arvind. In light of all of this, what's the normal course? I mean, because of the issues that you highlighted on the equity markets, or for oil as well. I mean, Saudi's made no pretenses about where it wants to see oil trading close to about $80 odd. Do you think that's a possibility? And in the event of that happening, and the issues surrounding the U.S. markets that you mentioned, which come to the fore now, what do you think the near term looks like?
Well, I think let's be clear. Oil has been moving up. Brent is crossed 72 on Friday. It's pulled back a little bit today at the open, but it's crossed 72. And the reason it's doing that is because supply-demand is tight. Demand remains very strong. And we're seeing negative supply surprises from a number of countries, not the least of which is Venezuela. There's a risk that Venezuela is going to have an election next month, which is quite likely to be manipulated by the current president. If that happens, there's a possibility there could be some sanctions from the U.S. Now, that is much more important for what happens to oil markets. And the other thing to keep in mind is that the Iran deal, which the president has to recertify every 4 months, is coming up also next month in May. And there's a good possibility that President Trump may refuse to recertify that deal as being in the U.S. best interest to continue. And therefore, those two are biggies that could cause further disruptions, but the fundamentals of supply, demand, and oil are already tight. Inventories globally have been falling. So I think one of the bigger risks, not so much to global markets as a modest risk, but certainly to a market like India, which is a big oil importer and where the current account deficit gets impacted by oil prices if they're rising too sharply, I think that does present a risk factor. And obviously, the other political turmoil, around trade and around U.S. political developments around around President Trump are all also factors that we have to keep in mind. But I think, to me, oil and related news flow over the next 3 to 4 weeks could be one of the things that keeps markets a little bit on edge.
Okay, Arvind Sanger, really appreciate your time. Thanks so much for being with us this late in the evening from New York.